In trading, knowledge is power, and lack of knowledge in what you're doing can be costly, very costly. So you need a solid foundation of quality market education. Whether you're new to trading or a seasoned veteran looking to add advanced strategies to your arsenal, there's always something to learn and something to improve on. And now you can access the same knowledge that professional traders receive with Market Rebellion's Trading Education. I'm Bill Johnson, Head of Options Education here at Market Rebellion, and we've assembled a comprehensive curriculum based on decades of real trading experience, covering everything you need to know about trading options from beginner to advanced. We go way beyond the nuts and bolts of options theory to teach you how to apply specific trading strategies and the techniques needed to adapt your trades when markets shift. Regardless of your goals, you'll gain access to the education you need with easy-to-consume lessons so you can learn to trade with confidence, enhance your knowledge, and master the practical skills required for market success. So please join us for in-depth trading education only from Market Rebellion. Hey, good morning, Market Rebels. Once again and Stu, this is from freezing cold Florida again.
Oh, stop your whining, man. Come on.
What do you guys up there?
We're not as cold as we were. We're like in the mid 40s.
That's not too bad. That's the we're like 65 right now, so
yeah, it's a little chilly for
very cold for us.
Kind. Yep. Mm-hmm.
Absolutely. But we want to welcome everybody to another edition of Coach's Corner. We came up with a very cool topic. This is actually one we did several years ago, but we thought it was very timely because of a lot of the questions that we're getting from people in the markets right now. We'll talk about that in just a second. But first, we're also going to share a special promotion, not our usual marketrebellion.com/get started that we talk about. This is a special webinar that we are doing 1 week from today. That's going to be next Thursday, 4 p.m. Eastern Time. That will be November 20th. And you can find it on YouTube. Right there, you just find marketrebellion.com, our channel. Click on the little bell, and you should be able to access the webinar. So anyway, what are we talking about here, Stu?
Today?
10 most expensive mistakes.
Oh, yeah.
Trading.
I actually have 12 of them that I highlight.
Oh, we got a whole bunch more. These are
it'll be interesting.
We had to narrow the list.
There's a lot of noise out there. There's a lot of fallacy. There's a lot of misconceptions about what's going on. A lot of noise. So
what to do and what not to do, and we're going to show you a lot of times there's going to be some very big mistakes. So please join us for that. It's going to be a lot of fun, and you will definitely learn a lot. So for today, what's this topic I'm talking about here? We're talking about Heiken-Ashi candlesticks with a twist. So again, the reason this came up, we have a lot of people saying, hey, Stu, it looks like the markets are a little toppy here. Should I get out? Is this trend going to continue? Now, of course, in the big picture, nobody really knows. But there are some things we can at least put a finger on and get some guidance. So for anybody who is trend following, momentum players, swing traders, stuff like that, really are going to like Heiken-Ashi. So there's really nothing you need to do on your platform. I'm going to show you how easy it is. It's usually just a click of a button. But what we want to show you here is what they are, why they're powerful, and more importantly, how to read them. So let's start with a chalk talk question. How do you spot a reversal on a Heiken-Ashi chart? Of course, that assumes that you know how to read a Heiken-Ashi, and we'll show you how to do that. But this is a very common question. One of the big reasons that we want to use a Heiken-Ashi is the trend done, or does it look like we're starting to hit some choppy water and about to reverse? And that's what we're going to find out here. So let's start off with candlesticks. I think most people at least know a candlestick chart, but we do find, Stu, that a lot of people don't really know how to read them. They look at them, they just say, "Oh yeah, it's green." They don't really know what they're looking at. So we're going to take a little precursor here and talk about what a candlestick is in general, and then we're going to show you the slight modification, but a very cool modification that makes them Heiken-Ashi. So we're going
And
to go all the
and
way back to the
just as a quick note, Bill, a lot of people get tripped up when the stock is up, but they see a red candle,
red candle,
and then vice versa. When the stock is
vice
down, they
versa.
see a green candle. I don't really get it, so maybe we could touch on that.
That's a very good point. We're going to see why that happens. So again, we got to go back to the 18th century to Munihisa Hama. I hope I'm pronouncing that correctly.
Oh my
Probably
God.
not. But this whole thing with candlestick charting started with Japanese rice traders, futures traders, and kind of like a lot of data that we have here. If it's government data or if it's government doing something, we're going, well, we don't really have a way to track it. Or maybe with currency trading, you're going, how do you track this stuff?
Bill, how do you say that guy's name again?
I have no idea. I think it's Munihisa. It's probably Munisha or something like that. But anyway, that was the guy that really started this whole idea of plotting candlesticks and looking for these very interesting patterns and stories that they tell. So it became popular in the early 90s in the US. And candlesticks provide an easier way to see the open, high, low, close. And certain patterns show indecision for traders, and these are the reversal patterns. We also have some that are continuation patterns, but the ones that we're mostly interested in are the reversals. So let's take a look. Why are we not moving here? There we go. So here's a couple of candles. These are red and green candle. The question is, what are we looking at here? How do these things get formed? What's happening on our chart or with the stock's price that's causing these various shapes and colors? Let's go to the very beginning, and let's say that our stock is trading here for 100, and we're going to plot one by hand. All right, so we got a piece of paper in front of us. I say, hey, Stu, the stock opened at 100, and so on today's date, wherever that is on my bottom axis here, I'm going to draw a little hash mark. I'm going to say, there's our opening. Just line it right up there with 100.
I feel like I'm going to start doing like a point and figure chart here.
It kind of has that feel, doesn't it? Right.
Yeah, it absolutely does.
And so let's say that at some time through the day, we come down here to 98 at the close. All right, so there's our closing bell. So I put another hash mark, and I say there's the close. And what I'm going to do is I'm going to just draw a box, going to connect those open and close. And because the close is below the open, we would call that a down day, right? That's what traders are. We close below the open. It's a down day. So we would color that candlestick in red. So your first visual, when you're looking at candlesticks, a red candle, I know immediately the closing price is below the opening price. Then, what else do we want to know? We might say, well, it traded as high as 101 during the day. So I'm just going to trace a little line right up to 101. So that line is just pointing to the high trade of the day. So obviously, the higher that line is, the bigger the range we had during the day. Now, those are technically called shadows. Don't know why. It certainly seems like wicks would be more appropriate. And a lot of traders today do call them wicks, but the technical term is a shadow. And then we do the same thing for the low.
So if you hear that, everyone, they're the same thing.
They're the same thing. Yep,
it's a different word for the same thing. Yeah.
So there's our high. And then let's say we traded down at 97 at some point. That was our low. Do the same thing on the downside. We just trace a line down and we say, okay, right where that's pointing, that is the low. Now, sometimes people think all of these numbers in here have meaning. They don't. It's just helping to give you a visual of how far below we were. It's just these endpoints that mean something. So those are the high and the low. And so there you have it. There's your open, high, low, close. All right, so again, those are the shadows or the wicks. And then this colored portion right here is called the body or the stick. So let's take a look at what happens if these reverse, right? The close isn't always below the open. Sometimes the close is above the open. What do you suppose happens there, Stu? Candle goes green.
It goes the other way.
Candle goes green. Yep. So that's going to be another good visual to say Green candle, oh, I can tell the close was above the open. Now, what Stu was talking about earlier is interesting. The red and green only talks about the reference to today's opening price.
Yeah.
We could have a green candle, but maybe yesterday's close is way up here.
Yeah.
And so we get this gap down. So it gapped way down here on the open. We rallied, we get a green candle. But your broker's platform or CNBC is going to be saying the stock was down today because it's looking at close to close.
Yeah.
So that's important to understand, is that your candlesticks only look at the closing price relative to today's opening price.
And that could actually, you could infer strength from that kind of
Oh yeah, yes you can.
that kind of price action. Stock got hit hard on the opening and it
On the
rallied
opening
all
and then
day.
rallied back hard.
Who was in charge? Who's large and in charge during the day? Well, the buyers were. That's how it
Yep.
got to be a green candle. And if you get a super long wick under there or shadow, that's going to, with a somewhat smaller body, that'll form what's called a hammer. And, in a certain kind of pattern, that could be meaningful.
Yep, that's a very good point. That's where you can start drawing a lot of inferences. We see that a lot in earnings, right? It'll gap way down, and then you see this really strong rally. Or it can gap down and it continues to sell off really hard. But
Yeah.
like you say, that those are good stories that they tell if you know how to read them. So the thing to understand whenever you're looking at a red and a green candle, that the highs have the same connotation. It's just the high, whether it's a red or a green candle. The lows are the low. But we have to be careful that the open and the close are on the diagonal. So just remember, in order to have a green candle, when you're first starting out, think about it logically. What makes it green? Well, the close had to be above the open. So this must be the close, this must be the open. The opposite is true for the red. The reason it's red is that the close is below the open. So again, you might have to kind of get your bearings and say, wait a minute, how do we get to be a red? I know this is open or close, this tops of this body right here, but to get red, the close must be below the open. So just remember that the diagonals are opposite, but the highs and the lows carry the same meaning. So it's a really easy way to just look at a chart and very quickly tell what's happening, even intraday. You might see this intraday, and if the markets are open, I should say that this would be the current price down here. But let's say that you're looking at your chart, you're seeing this, but then all of a sudden the candles start shrinking. What is that telling you? Well, it's rallying, right? The current price is moving higher. So we can get a lot of information just by quickly looking at these candles. So candles make it easy to determine what happened during the day, easy to see the open and the close, easy to see if the price was up or down for the day. And the alternative is a Western bar chart. This is what we typically used in the US. Again, prior to the 90s is when candlesticks became very popular. I don't like Western bar. I know Brian, for all of you who have seen him on Cocktail Hour, I've asked him about that. He said that's just what he was trained in. And so his eye is very used to seeing it. I find him very difficult to view. But this is a Western bar, and our high is the top, low is the bottom, just like a candlestick. But they use these little hash marks. And so if the hash mark is on the left, it's the open, and if it's on the right, it's the close. So in the very early days, that's all you would see on your chart, and you'd have to say, wait a minute, we opened down, we closed, okay, so the close, we had an up day. You had to really step through the logic of it. A lot of platforms today will at least color that thing green. But back in the day, they didn't. They were all the same color, and I thought it made it terribly hard to view. So this would be the opening trade, the hash marks on the left, and here the hash marks on the right, so that would be the close. But notice how much easier it is. That's the corresponding candlestick there on the left. Here's our Western bar on the right, and there's the corresponding candlestick.
So on the Western bar, Bill, I didn't even know this. So on the Western bar, it doesn't get color. There's no color at all.
I like Thinkorswim. I think most of the platforms do that. They would show this as a green stick with the little hash marks in it.
Okay. Okay.
But they didn't used to. It used to just be these, back when everything was black and white, candlesticks were black and white. And that's why I think the Western bars were very hard to read. Same information, but it's just harder to get. And that was the reason that they came up with these candlesticks. So not only are the candlesticks easy to read, they don't stop there, but now we get patterns and formations. And as Stu mentioned, a hammer or a doji or a dragonfly doji. There's a lot of colorful names that come with them, but each one tells a story, and then certain patterns tell a story, such as a harami or a maribozu candle. We talk about those all the time. So that's kind of the benefit of understanding candles. You can get a very good feel for what's happening in the market just with a quick glance at your charts. So before we get into Heiken-Ashi, quick reminder, where are you going to be next Thursday? Right
I'll
here,
be here.
10 top 10 most expensive mistakes. I think it'd kind of be hard to put the top.
Now.
Let's just say they're really popular, really big ones because there are so many of them.
Yeah.
But we're going to be talking about them, and it's going to be a wealth of information. You're going to learn a lot of stuff. So be sure to join us next Thursday, 4 p.m., November 20th, for that one. It's going
And
to
you
be a
know
lot
what
of
the
fun.
funny part about that topic is? All of them are pretty obvious, but
And they're
people just
probably all tied for first.
people all get caught up in their own noise, and you can't see the forest through the trees.
Yep. So that'll be a lot of fun. I'm
Good
looking
stuff.
forward to it.
And
Okay,
by the
so with
way,
that,
I just looked at my Thinkorswim on that bar thing. It does
yeah,
color code them, and it does have those little hash marks on the side. It's pretty interesting.
yeah, yeah.
Cool.
TOS does color code them. Some
Yeah.
platforms don't, though. So now that you have the background on a candlestick in general, what is a Heiken-Ashi chart? And people go, well, wait a minute, it's still a candle. They're still using candlesticks. That's true. But if you look at them, you'll see that there's something that doesn't look the same. You're going to notice there are no gaps. And there's these long streaks of reds or greens relative to a regular candlestick. Regular candlesticks typically have about half red and green over any given period. It's not true for Heiken-Ashi. So why is that? So let's go find out about Heiken-Ashi. So Heiken-Ashi translates a Japanese term to the average leg or average bar. And you'll see why the word average is in there in just a moment. It's an averaging method using traditional candlesticks. And what it does, it produces smoother charts for, again, trend following, momentum, things like that, which a lot of people are with options. Very few people are going to day trade options. That's a very hard thing to do if for no other reason because typically we have wider bid-ask spreads. We have gamma. There's a lot of things that can be troublesome if you're trying to just day trade signals. Most people are at a minimum going to be looking for some type of a trend. So how do we create this Heiken-Ashi? Now the good news is your platform's going to do it for you. But here's the first twist. Today's opening price isn't really the open. It's a fake. It's a make-believe open. And it's the average of the previous day's Heiken-Ashi open and close. Now, if this is our first candle, if you were drawing these by hand, it would just be the average of the open and close of the previous candle. So you're just going to take the open, close, add them up, divide by 2, and we're going to pretend that that's the opening. That's why you never get a gap. And that's also part of the strength of a Heiken-Ashi. Now, today's closing price is the average of today's true open, high, low close. So the closing is a fake. So if you're looking at a Heiken-Ashi and you go, wait a minute, stock didn't open there, or you're looking at the closing price, hold on, something's wrong. It's not wrong, it's just part of the calculation. So always remember that. The open and the close are a mathematical formula. They're not the real open and close.
So this is just a smoothing out
Very
process.
good. That's a good way to put it. It's a way to kind of, and that we're going to find out what it does. It's exactly right. Now, today's high is the high, and today's low is the low. So those stay the same. All right. So if you're thinking of your candlestick, the shadows are true, but the open and the close, what makes up that body, are fake. Just for reference. That doesn't mean that they're bad, that they're just derived from mathematical calculations. They're not going to fit the true open and close that you would see on a traditional candlestick. So we're just changing the open and the close. So let's look at an example. Let's say here was yesterday's candle. You know how to read that now. We had an opening green candle. I know this is the open, and I know we closed at 102. We had a high of 103 and a low down here of 99. So again, very quickly, I can see we've got more price action from open to close than to the high. Shadows are relatively small. little bit of a downturn. Now, we don't know when this occurred. This sell-off could have been off the opening bell, could have been in the middle of the day, could have been 5 minutes before the close, and then we rallied all the way back to here. We don't know by looking at that candle. We'd have to flip to an intraday chart to see that. We just know this is the candle. So, Stu, how are we going to create today's candle? Well, before the market's even opened, we know how to do it. We're just going to say 100 plus 102, add them up, divide by 2. Of course, it's going to be the midpoint. We know our Heiken-Ashi is going to open up at 101. Then we have to wait for the market to close. We say, well, here's our open, high, low, close. Let's say this is real data. All right, this is the true open, high, low, close, but we're going to average them. And if you average those four numbers, add them up, divide by 4, you get 103. That becomes our closing price. So the closing price is 103, which happened to be right there at yesterday's high. And so that becomes our body. Now, again, we follow the same pattern here. The close, even though it's fake, and the open, even though it's fake, mathematically derived, the close is above the open, so it's a green candle. Now, again, if you look at your traditional candlesticks, you say, wait a minute, we didn't close at 103 or open at 101. These are formulas. But what do we know? We do know the high was 106, and we do know the low was 100. So those are absolutely market driven. So this would be our Heiken-Ashi candle.
And Bill, I did just go into Thinkorswim and I put it on a minute chart. It does, for those of you that are wondering, and I was as well, it does work on a minute chart as well. It's the same
Oh,
thing.
yeah. Oh, for sure. Yeah. Yep. But I'm just saying, if you want, you wouldn't want to use a Heiken-Ashi intraday. I mean, you could if you're trend following. I'm just saying, to see what happened with prices during the day, you'd probably want to use a traditional candlestick chart on an intraday chart to see what actually happened during the day. So the first thing to notice is that you see how there's no overlap or no gap. We are guaranteed to have these overlap because by definition, we're going to take the open and the close, divide it by 2, right? Add them up, divide by 2, and that becomes our open. You will never see a gap on a Heiken-Ashi chart for this reason. Okay, so reading a Heiken-Ashi, green candles with no lower shadows or wicks show a strong uptrend. And candles with a small body, that's the stick part, right, the colored portion, if that's fairly small, surrounded by upper and lower shadows, that's where we start to see indecision and that we might be heading into a reversal. Red candles, opposite is true for the reds. Red candles with no upper shadow show a strong downtrend. And then, but again, there's going to still share the same thing. If we have small bodies with upper and lower shadows, we're going to say, hey, wait a minute, things are looking a little dicey here. So let's look at a Heiken-Ashi. All right, so here's a standard candlestick. And as I mentioned, yeah, kind of 50-50 reds and greens. Looks like we got maybe some streaks of greens in here, maybe some streaks of reds, but they're not very long-lived, right? Kind of more alternates. Now, by clicking a button, I'll show you how I do it in Tasty Trade, but in just a moment. But all you're going to do is click on a button from Candlesticks. It'll say Heiken-Ashi, and you go to that. Same period of time. See, you can see the trends really start to stand out. Now, also, if you back up, look at these gaps. See those big gaps in there? Got some, almost all charts are going to have some, maybe not glaring, but they're going to have some kind of gaps. But when we go to Heiken-Ashi, gone. Why is that? Because we're averaging the open and the close from the previous day. So also take a look. If you look at a candle, if you can see this green one here, the opening trade, we know that's the opening because it's green, is exactly halfway between yesterday's candle. That's by design. You see this red candle right here? Opening trade is exactly halfway of the previous one. That is true for every single candle because that's the way they're created, the average of the previous day's open and close. All right, so now if we zoom in here, take a look. We have no lower shadows, but we do have upper shadows. And we can also see lots of green. What is that telling you right there, Stu?
Looks pretty good.
We've got a very strong trend. That's harder to see with a regular candlestick. Now, and part of you'll certainly see that the prices were going up. You will see that, but you're going to see reds and greens, and you actually might get several reds in a row going, are we about to turn? But in the Heiken-Ashi, you won't see that.
So let's talk about that just for a moment here. So if you are looking at a regular chart, and everybody out there, look, I don't use really a Heiken-Ashi. Bill is much more well versed in the Heiken-Ashi scene here, but this to me is really interesting. So if you are looking at using a regular chart that we use, all the time, um, and it's got these bunch of red candles in it, you could you could force yourself out of that trade.
That's right.
Right. You could have a bullish thesis and
Yep.
you could see two or three or four red candles in a row.
Very good.
And you say, oh my God, it hit
Trend's
my
reversing.
stop, it hit my thing, it hit my whatever I'm using. And you say, oh, I'm out, I'm done. When the actual trend
Has not been
really
broken.
didn't break.
Right.
And if your thing was, if your strategy was to follow the trend, you are now actually moving out of that
That's
strategy
right.
based on something that did not happen.
When it was doing exactly what you wanted, you
It
got
was doing
faked.
exactly one way, but you got faked out. It was a little head fake, and you bailed, and then you got to miss. If it was like halfway up this big uptrend here,
Oh yeah.
you
You could
got
have
to
missed the
miss
bulk of the trend.
the second half of it.
That's
That's that's
and
that's right.
actually the way this went, there's a certain gain there, but look at the acceleration here. Yeah, easy to miss. So we can see that that is showing us an uptrend. How do we tell? Well, they're all green. Now, don't get me wrong. You might see a red candle squeezed in there. It can happen, but they're for the most part going to be all green. Like even if we start from down here, we can see they're all green. We got these couple of reds wedged in there, but it's still very easy to see that trend. But mostly that there is no lower shadow on any of these candles. You see
But even
that?
down there at the bottom, like right next to that candle, right next to the arrow, the green arrow that's pointing up, so that's got what Bill just said. That's got pretty much no, I mean, there's a tiny little one in there, shadow on the bottom,
Yeah.
and it's turning green. And that could actually indicate, a switch from what you thought was a downtrend on the red. But then look at the next one. I mean, the next one after
Yeah.
that is like,
Yeah.
pedal to the metal.
Yeah. So we're going to see that. We're going to flip over here to the downtrend. What do you notice here? There's our downtrend. We have no upper shadow and we have lower shadows. We've got lots of reds. Now, again, doesn't mean that we can't have some green squeezed in here. That's not your reversal in a Heiken-Ashi. You're just looking at the fact that for the most part, we have no upper shadows. We're seeing lots and lots of red. That's a strong downtrend.
Bill, that one, point to that candle you just were talking about, that blue one. Yeah, right there. So why isn't that indicative of a reversal?
It could be. It's just we typically want, and we're going to look at that in a second, but we're usually going to see smaller bodies and longer shadows on top and bottom. So this might have
Ah,
been a first question mark for us, but then we get this with no lower shadow,
right.
and then we got this one with again the longer shadows. It's not real clear. I will give you that, but it's not really a signal for a reversal.
So would you say kind of like in regular candles that we're looking at, maybe we need to look at two or three or four candles kind of in
Yeah,
a row to
yeah,
get an idea where one candle, doesn't really tell any story
right.
at all.
So what do you see in here? See, when you start seeing this, we had all of these large bodies with no lower shadows. And then we start hitting this little skinny body. These are doji or long-legged doji, but we get long upper and lower shadows. Do you see the difference? That's when you got to start putting the big question mark up, going, this is not looking good. Now, like we all know, reversals don't necessarily turn on a dime. Here we got a couple more big greens in here, but then we started getting these small bodies with shadows on the top and bottom. And then what eventually happened? Reversed.
So this is going to sound really stupid. Could I use this and when I'm seeing a string of two or three or four greens be bullish, and when I start to see the red turn bearish?
I think it would be safe to say that it would be a kind of give you a yellow light. start to give you some pause. But it's
Time to
like anything
roll,
else. We
maybe
usually teach a two
time to
candle
trim it.
break. I wouldn't like if I were in this and saw this red candle, I wouldn't be exiting. Now I might be exiting here,
Mhm.
but typically what you want to see is not these small bodies with the upper and lower shadow. You want to start seeing this. So if this came in, see, like right here, we didn't really get that. Oh, got some more greens. Started seeing small bodies. I'm not quite getting it here. Kind of small bodies, upper and lower shadows, not real clear. But now we start seeing these big reds.
You know what this for me, you know what this comes down to? Look, what my that in the middle of the page there, that real long green uptrend,
Oh,
that one there. So what my eyes see is a line, a trend line on the bottom of those candles heading north.
yeah,
And when that trend gets broken, just like if it was a regular
it's
uh
exactly, yeah. And you can
when
see
that
that right
trend
here.
gets broken, as
Yep.
our good friend Ron used to say, when that trend gets broken, there's no more trend.
Yep. And you could certainly
So
apply that right there with your
you
channels.
you
And
can
you can
always
see a
draw
break
that
here,
channel. Yeah.
a partial break, a definite strong break right here.
Hmm.
But think about that. If you're also getting another confirmation with these upper and lower shadows, it just gives you a little more confidence.
Just another tool.
Just another tool, all it
Yeah.
is. So with that, Chalk Talk, how do you spot a reversal on a Heiken-Ashi chart? We just covered it. You want to look for areas where you get into smaller body candle. In fact, there's some of them are going to be perfect doji, very, very tiny, but relatively longer upper and lower shadows. And that's when you're going to see what just happened there. Good time for the PowerPoint to stop. But that's how you're going to spot it. Now, let me show you very quickly on my platform. So here's a regular candlestick. And again, kind of hard. Now, we might say, oh, there's a trend. But would you have gotten shaken out here in these reds, or what about those?
Very easily.
See, very easy. It's
Super easily.
about a 50-50 mix. Now, in this platform, and most of them are going to be just as easy, you can usually going to have some kind of an icon like this for candlesticks. I'm going to click there, and there's the Western bar,
Look how
nice
Bill
little
does that
graphic.
with that laser thing. That's right on his mouse. That is super cool.
And so there's Heiken-Ashi. So all you do is click and watch the candles bang right there in front of you. Now, again, we start seeing here we actually did. This actually could have been a fake. You start seeing no upper shadow, and
Yeah.
we're seeing long red. So again,
Yeah.
that might have been saying that that's a pretty strong turn right there. So and here, but look at this. If we zoom in, what do we notice? What did you get right after that? Small bodies, upper and lower shadows. Again, saying this is probably not the trend is about to switch. This little
Look, there's all kinds of little tricks in here. You could say, when it clears, after that little flat piece in there, yeah. After that, when it on the upside, when it clears the previous highs, it's full.
exactly. You can
I
right,
mean, there's all kinds of little things you could kind of use, and
of
nothing
course.
certain. But this is a great tool.
Yeah,
I
it's a
think
great
this is
tool.
really
But it's
cool.
very easy to spot. So like watch if we just go to a different, I'll type in Microsoft. Now, if you saw that on a chart, that doesn't look like a regular chart. Why? First of all, there's no gaps. We also don't have shadows on the top and bottom, mostly. It's either one or the other. That looks a little odd. But we also see very long streaks of reds or greens. And if we go back to a candle, watch how quickly, see, they look quite different. You can spot them immediately. We get gaps in a regular candle, and we have lots of shadows up and down.
It's a great tool to help you train your eye to see the lines before
It's
they
exactly,
actually
it's a
appear.
good way. Yep.
It's a great exercise.
Yeah. So anyway, just kind of practice with it. I don't,
Yeah.
I will flip back and forth. I probably stay on a regular candlestick chart mostly, but I will absolutely flip to them. And I think it's something, again, like Stu said, it's just another tool. So it's something you should at least entertain. Super easy to do, just the click of a button, find out where it is on your chart, and you're going to have another tool to help you find trends. And with that, I think that's a good time to wrap up. We're going to look for all of you on next Thursday for Coach's Corner. We'll also see you 4 p.m. for top 10 mistakes in trading. And with that, have a great rest of the week, and we'll see you then.
See ya.